Hi, this is Leslie Juflis with Trading Live Online, and just want to update some of the areas that we've been following with a series of videos. First of all, let's start by looking on this chart. This is a weekly chart of the S&P 500, and I think we get a pretty good view of this, of the very steep slope in this decline in the index. Right around this area here, we had this clustering of price and Fibonacci levels in here. And in a previous video, I had marked that as an area to watch for support in a potential rally. Interestingly, it did get about a 300-point rally to the upside, but it's just still not showing any retracement yet on this weekly chart. So let's continue looking for an area where we might see a measurable rally, meaning that the price is going to come out and correct in a slope angle away from this steep slope here. So we're currently down at this area here. It's marked a 1 with a red arrow, and again there's a couple of Fibonacci retracement levels from here, and we also have this 2016, this very large range that had formed with an upside, very strong upside breakout, a continuation of prices to the upside. So the price today has gotten down to a low. I think it was about 21 70-ish, 80-ish. So very close to this upside breakout area. So now over the next couple of days, we're going to see if this price holds and see if a stronger rally can get going here. But let's look at a couple of things first. Okay, this is a chart of the VIX. This is a weekly chart. And if we look over here towards the left side of this chart, we see back in 2009, this 89.53, that was the highs of the VIX on that 2007-8-9 decline. And if we look back over to the right now, we see that the VIX has come up and tested those highs. The high level of the VIX a couple of days ago was 85.47. Now the price did make a new low in the S&P 500, but the VIX did have a divergence and was not able to make a new high above this high. Here's the daily chart of the VIX showing that it came up to this high a couple of days ago, and it's not able, has not been able to make a new high again. So let's take a look at a couple of other charts of interest. Here's a chart of the Nasdaq 100, and starting to see some divergences on this chart. This is a daily chart, and if we look over to the most recent price action, it's made a lower low, but our RSI down here, our relative strength index, is holding right now above this this level here. So this is something certainly to keep an eye on. Even if this index does come down and make another low, really want to watch this RSI and see if it's still showing some underlying signs of strength. Okay, on this chart, if we look up to the left here, we're showing February 19th, where that little red arrow is up there at the top, and that was just before this decline. There's a series of 127, 127, 127. The market was making these swings of high to low, back up to a new high with a 127 extension, back to a low, back to a 127. And the market was sort of putting the brakes on at that point. It was getting up to those extremely high levels, and there were quite a few divergences on all kinds of things up in this area. But right now, if we look down here where we currently are, we're seeing some 127s. Some other little patterns in here, but some 127 extension starting to come down. If the price comes down and makes another low before it does turn up for a measurable type of a rally, then we may see prices down just around this 2116-ish area. Could even pop a bit lower than that. So let's keep an eye on that. This is an intraday chart of the S&P 500 E-mini, and I've got some trend lines drawn in here. And sometimes working with trend lines, you just sort of have to keep with it. Things that sometimes look like a breakout, such as down here, they come back in, they find some resistance from some other price points, and then you simply draw some new trend lines. For right now, is the 2300 level that I'm keeping an eye on. See if the market is able to break above that and hold above that on this trend line. So I'm going to be watching that over the next couple of days. And again, if the market does come lower, then we have some of those other areas to look at. And let's look at that just one more time before we go. So here's the weekly chart, and again, just to refresh, if the prices do not hold this support area right here, then just below it, you can see this red triangle drawn in here. That's a 1.27, a large one, from the December lows up to the 2020 highs. And that's coming back in right around just above the 2000 mark and just below it. And if we just look over here, this large range from 2016, these are coming right in about the center of the coil. Now the center and coils can be magnets for testing. Also the upside breakout areas or a downside breakout area as well. But the center, if you take a look, you can see how often the price would trade around the center. If we look, we see the price move down through the center and come back up and down and up several times right in there. And so if we just kind of keep following that, we can see that eventually the price retested that center just before it finally broke out to the upside and then continued up. So if the price comes back down to these levels here before we make a measurable move to the upside, then I want to be looking at these areas for signs of support. So that's it now. Thanks for following the videos on Trading Live Online, and come visit the website and feel free to ask any questions that you'd like.